we have a poll, and I'll bring it up so that you can see it, folks. This is the question: are central banks underestimating inflation? Answer A, yes, there's too much government spending, and monetary stimulus. B, absolutely, it's structural and we're heading for stagflation. C, no, inflation is a temporary phenomenon linked to supply shocks and worker shortages. So let's give the audience a chance to answer that question. And as they do, panel, how would you have answered the question, Stacey?
I would go with C, but temporary is a subjective term.
Would you prefer transitory?
Well, it's just hard to say exactly how long that'll last.
Piyush.
I don't agree. So I think inflation is getting to be a lot more structural for two or three, the two or three anecdotal observations. One is a lot of inflation is now wage inflation. I'm seeing wages go up everywhere. Not just in the US, but in our part of the world. I was mentioning before, I announced in December that there'd be no wage increases in my company this year. That pronouncement lasted 100 days. I started losing people. We had to double, and most of my clients are doing that. So, and wage inflation is sticky. It doesn't go away. Second, the energy issues. As we're trying to disinvest in the fossil fuel economy and shifting, I think there's a structural shift which is going to drive energy price inflation. And on the supply chain, all our clients I talk to at the ports, at the ships and so on, I don't think the supply chain is a 1, 2, 3, 4 month issue. It could be 2, 3, 4 quarters. And what happens is when you start seeing sticker prices of 6 and 7%, that starts building inflationary expectations. And once inflationary expectations get anchored, then you get into the spiral. So I don't think it's such a temporary phenomenon.
John, how would you answer?
Let's remember, inflation's at a 31-year high, at least the data that came out of the United States. It's clearly going to remain high for the foreseeable future. So there's two issues. There's one, where is it ultimately going to remain when it does come into some new paradigm normalization? I think this global argy-bargy in terms of supply chains, people reestablishing their models, and the sort of deglobalization is going to continue for several years, probably 3 to 5 years. So it's going to be a period of time where inflation is going to be very volatile. So the issue isn't inflation is going to remain high. The issue is where it's going to reset. Will it reset around 2%, which has been the Fed target, or higher than that? So that's what we should be focusing on.
Axel?
Combination of A and B, except for B, I don't believe we had for stagflation. I think we'll see continued growth. We're going up to our old growth trajectories, but in my view, there is some structural elements that are not just transitory or temporary, and I think we'll have uncomfortably high rates of inflation for 1, 2, 3 years like that. Then it really depends on policy, because if you assume, as in A, that monetary policy and government spending remains extremely expansionary, then I think we get more structural problems that we run into. But if they do their job and normalize policies and normalize spending coming out of the crisis, move to a more normal mode of operation, it can be more short-lived. But I think it really depends on how these levers are moved in the next years.